Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, the Indian market snapped a two-day winning streak as well as ended lower on the Nifty, ending at the day's low point at 22,350, losing about 160 points in trade. The broader markets also continued to deflate. It was the small cap index that fell the most, about 2% odd in trade, and is now 8% off the high points of or the peak that we had seen recently. All the sectoral indices also ended with losses on Monday. The question is, will the profit booking continue or will there be some kind of a bounce back? We will tell you all of it, but first up, the top headlines this hour. Indian stocks are likely to remain in profit booking mode on Tuesday as weak overseas cues and a strong regulatory stance against excessive speculation deters bulls on Dalal Street. Low volume seen. And it is raining block deals as promoters take advantage of record highs to book smart gains. This time, ITC's UK parent, BAT, plans at least a $2 billion stake sale. Also, in the pipeline is Fintech's deal for retailers. Very good morning to all our viewers present today, as well as good morning to you, Shail. It was the weakness, Shail, in the large private banks that largely, put some pressure on the Nifty on the upside, as well as the commentary from SEBI chairperson Madhabi Puri Bhuj, who spoke about some of the froth or some kind of, a bubble being formed in some parts of the markets, especially the manipulation in the SME space that led to the fag end losses in the markets. How do you see the markets going forward from here? We also do not have too much of global support.
Yeah, good morning, Sakshi, and a very warm welcome to all the viewers who are now joining us on this lovely Tuesday afternoon. As you can make out, the weather's now moving towards a bit of warmth in Delhi at least, and the cold wintry mornings are possibly a thing of the past. Be that as it may, there is spring as far as weather is concerned, but that spring is missing from markets on the long side at least. Sakshi, you mentioned all the major points on the Nifty, so no point repeating them or on the Bank Nifty. We'll just talk about what the sentiment is at this point of time, and that is not in favor of the long side, at least for the moment. I think there's an echo in my voice. The PCR will sort it out. Till then, I'll just remove the earpiece. So what basically is there in the markets at the moment is that there is supply, and supply is coming from the most clued part of the market, which is promoters. There is a flurry of block deals that we've seen in the past 15 days, starting from Zomato, starting from Whirlpool, Agrotech. The list is so long that now I seem to be forgetting it. But there are two more in the pipeline, the mother of them all, ITC. There is some media reports and some confirmations that the deal might take place maybe today evening or maybe tomorrow morning. It's a huge transaction worth at least $2 billion on ITC, India's top cigarette maker, and the seller is BAT, British American Tobacco, which is the UK parent of ITC. So this block will need deep pockets to get absorbed in the market. What will be interesting to know is who the eventual buyers will be. Similarly, a smaller block might be made available on Fintech, and yesterday's transaction on Indigo Airlines, India's largest airline has also gone through fairly well. So these are signs that if promoters who run the businesses feel these stock prices are good enough to book partial exits, then who are we as retail investors or fund managers or ultra chennais or even family houses and PMSs to argue about what valuations are. If a promoter is selling, one must understand that he or she is deeply clued into what the business is, and at this point of time they feel this is either overvalued or at least the right time or fully valued. So with that background in mind, you must approach the markets, and the fact that there is a lot of regulatory action in the pipeline. Regulators such as SEBI have used public platforms to voice their concern about the bubbles that are there in some parts of the market, especially in the small cap and the mid cap space. And if you've been glued with us over the last 4-5 months, repeatedly in most headlines, we have advised extreme caution on the long side, and that seems to be now finding its way out into the market. So weak overseas cues, nothing much happening on the indices as such. The Nifty ended at day's low, 160 points lower, 22,322. Let's see where the supply stops. I would imagine, over time you'll see 22,200, 22,250, and then we'll look at intraday dips to buy into intraday rallies. What is certain is that there is supply at the top. 22,400, 22,450, 22,500 is not getting breached. Once that is taken out, then we look at the long side, Sakshi.
Absolutely, Shail. Now, as far as the Nifty Bank is also concerned, major profit booking was also seen on this index after a consistent northward journey in the recent trading sessions that we had seen. The banking index fell about 500 points or over 1% in trade to end the day at 47,328. And this is after the large private banks had just started to move. And then therefore, we did see some brokerage houses reports again putting the question on the upward rally that we had seen in some of the stocks like HDFC Bank. How do you see the Nifty Bank now poised to move forward, Shail?
Sakshi, I think you've encapsulated what the mood is on the Bank Nifty. Again, the same set of issues that are working on the Nifty are applicable to Bank Nifty as well. Let's see when we hit a new record high. That is in the pipeline, without a doubt. It's just that we have this intraday, a week of probably some pain as far as profit booking is concerned, and then probably an uptrend will resume.
Okay. Let's also talk about the F&O space. Any particular stocks there, Shail, that you will be keeping an eye out on?
Sakshi, I think we'll start for once paying attention to the FMCG space and the pharma space for two reasons. Because the market is defensive, and over time we've learnt that it moves to spaces such as pharma, spaces such as FMCG. Therefore, the likes of Sun Pharma, the likes of Cipla is what I'm looking at. And if you look at the FMCG space, I think we'll pay attention to, for a change, on Nestle, 2.1% higher. The stock has caught its mojo after that fabulous 10-for-1 stock split that happened about a month ago, and now it's sort of come back into the limelight. 2,600 yesterday on the back of short covering. I would look at these as far as prices is concerned on the long side. There is not much of trade to report on the long side. I think people are just waiting for the market correction to get over and then maybe resume. As you mentioned in your headline, volume will be low today.
Okay. Let's also look at how the global setup is. So the US stocks retreated for the second straight session on Monday, easing further from record high levels, and this is right ahead of the US inflation data this week, which could heavily influence the Federal Reserve's interest rate path going forward, and therefore there is some kind of weakness. We've also seen slight dips on the S&P 500 and the Nasdaq overnight, about 0.4% of a dips, just that the Dow Jones managed to eke out some gains, about 0.1% on the uptick uptick is what it closed with. As far as the Asian markets are concerned, they were trading mixed in the early trade as Japan's corporate inflation figures for January came in higher than expected. So Japan's Nikkei 225 slipped about 2% odd in trade. Early trading session, we've seen slight uptick on Kospi, about 0.3% odd. Again, a mixed trading as far as Hang Seng is concerned and Shanghai is concerned. So 0.7% uptick on the Hang Seng and about half odd percent of a dip on the Shanghai index as well. When we talk about the GIFT Nifty, the indications are that the Sensex and the Nifty could open on a positive note as they indicate a gain, start with a gain of about 26 odd points, but just about minor gains at that. As far as the flows are concerned, remember the FIIs bought shares worth 4,000 to 12 crores, while the domestic institutional investors also purchased about 3,238 odd crore rupees worth of stocks in yesterday's trading session. Let's now talk about some of the stocks. As mentioned, ITC is going to be extremely important to track because British American Tobacco, the maker of Lucky Strike cigarettes, is preparing to kick off a sale of part of its stake in the Indian partner ITC as soon as this week, and we could get some more details on that. Aditya Birla Capital, that's going to be in focus. The company has announced the merger of its wholly owned subsidiary Aditya Birla Finance with itself as the large non-bank lender seeks to comply with RBI's mandate on scale basis regulations as well. RVNL is again going to be in focus because the company has said that it's emerged as the lowest bidder for a significant project in Maharashtra's metro infrastructure development. RVNL secured the bid with proposal amounting 339 odd crores. The Maharashtra Metro Rail Corporation has awarded the company the contract for design and construction of the elevated viaduct, so that's going to be important. Triveni Engineering has acquired 25.4% stake in Sir Shadilal Enterprises for an aggregate consideration of 35 crores. So some acquisition news there, even though small scale. Hindustan Zinc, that could be in focus. The centre has reportedly opposed the company's plan to demerge into 3 separate listed entities with zinc, lead and silver as also recycling businesses. So there could be some kind of a dip on that one. Wipro is going to be in focus again as the company has expanded its partnership with Nutanix Inc. to launch a new Nutanix focused business project. PSP Projects is going to be in focus. It's received various new work orders to the tune of 410 odd crore rupees as well for building fintech related businesses in Gift City of Gandhinagar. So those are some of the stocks that we will be looking at. We'll also be joined by an expert pretty shortly. Vineet Polinchkar will be with us, the head of research at Ventura Securities. But these are specific stocks that I'll be looking at. Anything else, Shail, that you'll be keeping an eye out on?
Sakshi, the Tata Group, I would imagine that you will see profit booking continuing in Tata Chemicals, to some extent Tata Power, as also a couple of other frontline counters which were associated with this market hope and expectations that Tata Sons would get listed, and its minority owners, the companies that I mentioned, in particular Tata Chem, Tata Motors, Tata Power and Indian Hotels would see value unlocking. That doesn't seem to be happening as far as notes are concerned from the company itself, the parent Tata Sons. So those profit bookings will continue. On the short side, I believe there are fairly decent trades in the market, and let's pay attention to some of them. As far as rankings are concerned, I would imagine NMDC, Escorts, GAIL, the entire PSU pack where we had seen fantastic run-ups will now see decent bouts of money being taken away. So these are the 1 or 2 sectors that I feel you might see some pain creeping in. It's not exactly pain, it's more or less profit booking. One must understand that whatever goes up sharply has to come down for 2 reasons. It's normal profit booking, and it allows newer players, better players, younger players, players with deeper pockets to come into the same set of stocks, and then they take them up beyond previous record highs. That is how markets work, and that is how markets will work in the coming days, coming years, coming decades. So it's a cycle, and one must understand the cycle. More importantly, one must respect the cycle and be a part of it. Sakshi.
Okay, let's also look at a slew of brokerage reports that have come out as of today. So let's look at first Kotak Institutional Equities, which has given its sell rating on Tata Chemicals with a target price of 780, and it does believe that the recent news reports that Tata Sons may be not looking at listing and avoiding the IPO, that could continue to have an impact because the value unlocking will not take place. So that's something that we will continue to watch out for. Again, apart from this, we've also seen that India Mart is on top radar of brokerage houses. Jefferies has come out with a report with a buy rating and 3400 target price on this one. It indicates that post-initiation investor feedback, investors indicate concerns around execution challenges, slowing subscriber additions and SaaS investments. However, investors agree with India Mart's structural growth potential and moats as well. So that's as far as India Mart is concerned. Apart from this, the gas sector is on the radar of the brokerage houses. So Morgan Stanley has come out with a report saying that they expect the gas market oversupply to reach multi-decade highs over coming years, and this will inflect demand, especially in India and Southeast Asia, and save $10 billion in energy cost through 2030 or 2030, and with energy consumption rewiring back in favor of the gas for region as well. So they're overweight on GAIL, and the target price for this one has been raised by them to 213 odd rupees. The other stock that's on top radar is Zomato. HSBC has come out with a report. It has raised the target price for the company to 200 rupees, and it does believe that the digital spend share will increase in India, and within that the platform is going to be gaining share, thereby helping Blinkit also. And it also expects the Blinkit ad revenue to be about 3% of the total digital ad spend over the next 5 years, which is around 5% EBITDA margins as well. So those are some of the reports that are coming about. Adani Ports, that's also on the top radar of brokerage houses. So we have MOFSL and HSBC both coming out with reports on this one, with 1600 as one of the top targets given by MOFSL, and they've also maintained a buy rating on the company as well. So those are some of the stocks that are on top radar of the brokerage houses as well. We'll wait for Vineet to join in. Meanwhile, Shail, what will also be important is now to go back to the macros and also to see how the interest rate path will be charted out both globally and locally, and that will be perhaps the next big trigger for the markets.
Sakshi, we are already on the lookout for the inflation data. I think it's today for the month of February as far as India is concerned, and similar data for the US. Of course, that trajectory will be watched. It will also be watched in terms of how liquidity is injected into the system, even if interest rates don't come down. So that, of course, is coming in. So March 12 is when the US inflation data will come in, as also India CPI data. Ours will come in post-market hours, and the US will follow suit late evening. That's there. The fact that, in India at least, inflation seems to have tamped down a bit, and of course we'll have fresh crop coming in. So local vegetable prices as well will come down, if not stop moving upwards as we had seen because of erratic monsoons and other weather problems. But our data on inflation will be fairly muted. Let us see how US inflation comes in, and at that point of time we'll also look at how interest rates will move. The job of the RBI is very simple. Till the point there is a cut in the US interest rates, the RBI will not move, and between that point and today, the RBI will ensure that there is adequate liquidity in the market so that credit demand remains fairly saturated, and the fact that people have and can borrow at will. So these are the 2 points. In fact, we'll also see Japanese GDP data coming in today. So 3 data points from the macro side today: India and US inflation for the month of February, as also Japanese GDP data. Sakshi, the Japanese Nikkei is at an all-time high after a gap of 38-40 years. And as a kid, I used to live in a small town called Meerut. It was absolutely back of the beyond, no connectivity at any point of time. But the reason why I am in stock markets now is because I used to read about Japanese stocks at that point of time when the Nikkei was hitting record after record, and it used to come in a magazine called Reader's Digest, which by the way is now a product of the India Today group.
Absolutely.
So life comes to a full circle.
Absolutely. What a wonderful anecdote right there. The other important bit will be to look at the ICICI group also that's listed, Shail, because the retail chorus against ICICI Securities delisting is getting louder as the EGM is nearing. On March 27, we will see that extraordinary general meeting will take place, and both the management and the minority shareholders of India's leading broking firm ICICI Securities, they will be looking at whether or not they should be proceeding for the firm's delisting. At the meeting, approval for company scheme of arrangements with ICICI Bank will also be sought, and while the company has engaged the services of Trustwell Management Consulting to educate investors on the delisting process, many retail shareholders have joined forces, and they are talking a lot on social media platforms to oppose the delisting as well. So that group will also be in focus. In the last 1 week, we've seen the stock slipping about 6.5% odd. So that will be also important to watch out for from the retail investors' perspective.
I think, Sakshi, especially for media and especially for people like us who've been watching markets for a very long time, it is essential we call spade a spade. And without taking names, but for those who know what I'm referring to, the systems are the IT systems for old world brokerages, which was set up in 1990s, early part of 2000, are completely legacy. It's so difficult to even do basic things compared with handheld brokerages that have come up and are doing fantastically well. You'll be surprised to know, Sakshi, that the entire broking profit of the entire industry, 50% is taken away by one unlisted player. And the remaining is distributed in about 10-12 brokers. And ICICI Securities is not among them. That is because, their business was dependent on the ICICI Bank customer, right? To a large extent. And, it's a painful process. Let's accept it. And that's the reason why valuations of ICICI Securities are nowhere near what brokerages such as Angel One are having. How quasi finance companies, we talk about this financialization of assets, right? And we talk about stocks like CAMS, KFintech, CDSL, BSE, NSE in the listed space. They've done fantastically well, but look at ICICI Securities. It's gone absolutely nowhere. And everybody within the ICICI setup knows what the issue is, but they are unable to bell the cat. And the issue is that it has legacy systems. They are old world and dated, and they don't talk to each other. How do I know this? 1996, I had opened an account there. It doesn't work. I'll be very blunt.
Okay, so we'll keep an eye out on this. Meanwhile, we
all that the shareholders of ICICI Securities want is value creation, which unfortunately doesn't seem to be happening over the past so many years.
Okay, there is a problem, and that the company and the conglomerate should be looking at it at this point in time and seeing how they can best please the retail investors, shareholders at large. We'll take a quick break, viewers, and when we return, we'll be joined by our experts to help you navigate through this trading session. And before that as well, prepare you with where exactly should you be keeping your focus and the stocks that they are betting big on. Stay with us.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Welcome back to Market Today. I believe Vineet Bolinchkar, Head of Research at Ventura Securities, is with us. Good morning to you, Vineet, and a very warm welcome. What do you think of market sentiment? Pre-open is upon us, and anything that catches your fancy at current levels? Good morning.
Good morning to you. And the markets look to be in profit-taking mode across board, large cap, mid cap, small cap. And especially the fact that, these ED-led issues have cropped up. A lot of stocks have taken a big whack in the small cap and the SME segment. My contention is that this, as I've been pointing out much earlier, right from Feb, that, this is the time to take profits and accumulate stock probably in the last week of March, when you get some very, very attractive levels to buy into the market. And that is a time when, if you have bought, you will reap the harvest in the month of April. So that is the way you should be looking at stocks. How do you identify stocks which have been, which are attractive to buy? One trend is to find stocks which have fallen far lesser than what the, tracking index is doing. And second thing is, amongst your favorite stocks, if there has been some kind of heavy selling, unnecessarily more than what the market has done, you need to do a little more bit of research to find that, they have bottomed out, and then pick some of these stocks. So that is the way to go about it.
Okay. Vineet, what we'll do is we'll very quickly look at some pre-open rates and then come back to you for your two stock picks which you think have either adequately corrected or have fallen less than their benchmark. Ladies and gentlemen, we have a mild green, light green move on the Nifty, 22,340, where it was yesterday. At the moment, up 8 points. Let's look at a couple of prices, and surprise, surprise, the first three on the top side are the three index heavyweights. Reliance is 22 rupees higher, 29.56. Infosys is 7 rupees higher, 1607.50. HDFC Bank at 1433 half is 5.7 rupees higher. So this is fairly substantial. I just want to see what ITC is doing. At the moment, absolutely flat, 409.40. Let's look at some other prices in the FNO space and then head back exactly to beneath. AB Capital, this is a merger that's happened at the rear end. The company will be turning into an NBFC. 4% higher, 187. Oracle Financial Services, its parent has come out with a blowout number on NASDAQ as far as quarterly numbers are concerned. 8,400, 3.6% higher. The Indian stock reacting fairly positively. In terms of top losers, it's Tata Chem, 1.4% lower, 1159, and we have a downtick on Syngene and ICICI Bank. This is how the market is shaping up. We'll come back to it a bit later. We have a quality stock picker with us, which is Vineet. Let's pick his brains. So Vineet, over to you. What's cooking as far as good stock prices are concerned? What's on your menu and what are you serving on the table?
So three stocks which very, very strongly come to mind among those which have bucked the trend are Reliance, Adani Enterprises and SBI. Although SBI has fallen a bit, but it's still hovering around 5% of its recent highs. And among the stocks which have fallen quite a bit, I think one stock that deserves mention is BHEL. And these four would be my stock picks to accumulate for good benefits coming in the month of April to May.
Okay. It's Reliance, State Bank of India, BHEL, and the fourth one I could catch.
Adani Enterprises. Adani Enterprises.
Adani Enterprises, fine. Let's hold your horses there. Yes, Adani Enterprises. We have Ashish Chaturmota also joining us. A very warm good morning to you, Ashish, and what a pleasure to have you here with us. Long time no see. Let's take this conversation a bit deeper. Lots of pain in the market in the mid cap and the small cap space, where you hunt a lot for medium term, long term winners. One, what do you think is the sentiment on the large street? And two, what's on your radar?
Hi, good morning, Shailji. I think, broadly, as far as small and mid cap is concerned, after a reasonable period of a long rally, we are witnessing some amount of consolidation, and obviously regulatory concerns are also playing its crucial role in the profit booking which we are witnessing in the small and mid cap space. As we all know, most of these small and mid cap stocks are trading at a significant premium to their 3 or 5 year average multiples, and this is now getting reflected into the price behavior, where I think some amount of consolidation is taking place and on a verge of some breakdown below important moving averages. So my sense is it's time to stay a little cautious into small and mid cap names and focus a lot on the large cap and large mid cap companies, where I think attraction or a shift of money can start happening. And that's why our focus is predominantly at this point of time into large and large mid cap companies. Now, as far as the sectors are concerned, because market is getting more defensive, I think two sectors which looks very promising from the defensive basket is pharma and IT as a basket. And within pharma, I think the large cap pharma companies are showing very strong traction, whether it's Dr. Reddy's, Cipla, Lupin, or Sun Pharma. And to ride this trend, rather than betting on individual names, what we are recommending is a Pharma Bees ETF, which is quoting around 19.57. Our disclosure, as far as disclosure is concerned, we continue to hold this ETF in our portfolios, because we have been recommending this ETF for a reasonably long period of time. And my sense is now I think there's going to be some good price action which we can witness in this ETF. So as far as Nifty Pharma Index is concerned, it has come out of a consolidation of almost 7 to 8 years, and now it looks like we are going to see some serious price action building into this space. We are seeing the double digit price erosion which we are witnessing has come down to single digit. So this is going to positively reflect in the behavior of pharma stocks. And second is the specialty business is doing reasonably good. So I think the stocks like Sun Pharma is going to be a key beneficiary. And to ride this, I think pharma ETF can be looked into. On downside, very, very strong base around 18 odd levels. Keeping this in mind, my sense is it is moving towards 23 to 24 kind of zone in next couple of months. So this could be a good positional bet at this point of time, the pharma ETF. The second idea which we like is in the power space, and I think within this space, REC is one stock which is looking quite promising, trading at 1.8 time price to book, having a dividend yield of almost 3% with a ROE and ROC of almost 20%. I think REC is one stock which looks very promising even on the technical parameter. So our sense is on downside, 470 is going to act as a very strong support for REC Limited. And looking into the broader chart, it looks like stock is poised to cross its previous all-time high, which was around 520, 530 levels. And if that happens, I think a move can extend towards 560, 570 positionally. So I think there's a good upside potential in stock like REC Limited.
Okay, so that's the two recommendations. One is from the pharma pack. The best way to get exposure to pharma space is through the pharma ETF, and from power space it is REC for Ashish. Ashish, you also mentioned IT stocks. We've started to see some traction on the large cap IT names after a long haul. Would you be looking at large caps versus the mid caps, which have been rather outperformers, or would you still have a mix of both at this point in time as an approach?
Good morning, Sakshi. So I think it should be a mix of both, because as far as mid cap IT is concerned, there are names like Persistent, Cyient, or for that matter stocks like KPIT, which has been seeing a very, very strong performance in terms of their business momentum, and in an environment where large cap IT was on a drag, we have witnessed very strong I would say, top line growth, bottom line growth, and the EBIT of most of these companies were in a in a structurally strong trend, and this has got reflected into the price behavior. So that's the reason why stock like Persistent, Birlasoft, KPIT, these stocks have significantly outperformed its large cap peers. But going forward, since we believe interest rates are going to peak out, and this will eventually lead to discretionary IT spending coming back into power, and obviously from a price behavior perspective, IT has been a dragger for last, I would say, 2 to 3 years time frame. So it is coming out of that long consolidation phase, because now the macro is also going to support because of falling interest rate environment. So this is going to positively get reflected into the price behavior of large cap IT companies. And here again, my sense is, betting on individual name, it's better to have ITBs as an exposure, because I think it will have exposure not just to the large cap IT names like HCL, Infosys or TCS, but maybe something like Wipro or Tech Mahindra, which are predominantly, which play its role in the last leg of the rally, or maybe second leg of the rally. And that's the reason I think to have an exposure to all these names, ITBs could be a good play, which is quoting around 39 odd levels. My sense is it has seen some profit booking from 42 to almost 39. So at this level, it looks like risk reward is quite favorable. Around 37.50, 38, there is a strong support. So keeping this in mind, I think ITBs has a potential to move towards 44, 45 kind of levels in next couple of months. So I think yes, ITBs looks quite promising in an environment where we see some amount of consolidation is possible at a broader level.
Okay, that's we'll keep an eye out on that too.
Okay, ladies and gentlemen, Sakshi, just a moment. Ladies and gentlemen, what we'll do is that because these prices on the ETFs are not visible in terms of how they are quoted, we are going to show you two graphs, both of the pharma ETF that Ashish has mentioned, and the IT ETF that he's talked about. Ashish, just confirming, these are both Nippon Bs, right? I'm just confirming from you. One at 19, the other at 38.
Yes.
Right? Right. Okay. And one word I'd also like to put in terms of tracking sectors and in terms of making money out of them, it is hard to find anybody better than Ashish Chatramotha. His two top ETF picks have been CPSE ETF, somewhere in the vicinity of 40 rupees, which is now at 80, and of course the banking bees, the PSU banking bees, which for the moment are in the vicinity of 78, 79 rupees. He picked them up at about 28, 29. So you can well imagine how his consistency is in these ETFs. We are just going to show you both these ETFs in chartical fashion, which is the ITBEES as also the pharma ETF. You have to buy them via your broker, because these are exchange traded funds tracking the underlying index of that sector. Vineet bhai, coming to you, how do you see this plethora of block deals that are happening, and any clue who would be a buyer on ITC?
My guess would be LIC, because LIC is the buyer of last resort, and they could possibly be buying because they've sold off at higher levels. And this is the typical strategy that LIC uses to accumulate stocks. Also, one thing I would like to point out is that the segment of the FMCG and consumer space has trailed the market substantially. It has underperformed, and if we have a good monsoon session picking up, then I think we would have the FMCG or the consumption sector coming back. And this underperformance that we've seen over the last few years could provide for a spate of outperformance, which could drive the markets higher in the sector.
So, like to take your view on ITC, since that's going to be in focus as London-based PAT, the British American Tobacco Company is probably looking at again a block deal and looking at a potential divestment of around $2 billion to $3 billion in ITC. How do you see the reaction on ITC then to pan out? Right now in the pre-opening trade, it's about 0.7% down.
So I think, it has been a no-go for BAT in terms of wanting to take control. And them exiting the stock will not have a significant impact on the markets, given the fact that, that they did not call the shots in the management. So I think they're exiting their investment if that were to be the case. And the stock is now going into stronger hands, which may want to hold on to it. That is why I told you that LIC could be one of the buyers. And in my opinion, BAT leaving the counter does not change materially anything for the company. In fact, what will happen is that decision making will be faster. There will be more challenging decisions being taken because BAT has been mostly opposing a lot of things that the board has been proposing. And if that were to happen, I think the first thing would be obviously the listing of ITC hotels, followed by value unlocking taking place in these counters.
Okay, it will be the relisting of ITC hotels somewhere in the 1990s. This company was a separate listed entity. Be that as it may, we'll again look at the markets now. Absolutely flat opening on the Nifty, 22,340 for you. Mild downtick on the Nifty Bank, 100-point uptick on the Nifty IT index, 37,092 for you, and the Nifty 500 opening flat, 20,294. A very quick look at what holds for the index heavyweights. Reliance is 7.5 rupees higher, 2939.2. Infosys is 8 rupees higher, 1609 now. HDFC Bank is 2.5 rupees higher, 1430. Remember, these are the three index heavyweights. They are opening in the green. This is such a good thing to happen. Now let's look at ITC. ITC for the moment is down 1.9%. It's a cut of about 8 rupees at 401. It's at a multi-month low. A very quick look at what's happening in the F&O space. Oracle Financial Services, top gainer, 4% higher, 8438. It's shining the spotlight on the earnings of its parent, which were announced on the NASDAQ. AB Capital, 5% higher, 189.95 after the merger of a company within itself. Tata Chem, Pain, 2.5% higher, 1146. What else is interesting? Let's look at NSE 500 very quickly. We have such fantastic guests. Let's speak to them, rather look at prices. Okay, nothing catches my fancy. We'll let it be. What we'll do is we also have a technical guest with us at the moment, Mr. Ayush Mehta. He's a technical research analyst at Nirmal Bang Securities. Ayush, good morning to you. Anything that catches your fancy in the markets as of now?
Good morning, Shailji. Good morning to all the viewers and the panelists. I'm liking Zydus Life right now. If you look at the charts of Zydus Life, it has given a multi-year breakout on all the time frame speed, weekly, monthly, daily. Plus on the daily chart, it has given a new breakout right now. It is currently trading at around 1,000 rupees level. So I think Zydus Life can be bought at current levels by keeping a strict stop loss of 980. The targets I'm looking here is 1045.
Okay. Right, so that's Zydus Life for you.
Zydus coming in from you. Sakshi, yours.
Yes, absolutely. Aditya Birla Capital, I look at that stock, it's 5% higher in trade in the futures space, a very strong move, and this follows the news flow that Aditya Birla Finance, the wholly owned subsidiary, is looking to merge with itself as well. Vineet, your thoughts on how this merger will play out? What does it mean for AB Capital, and how would you advise investors to go about it?
So I think there's marginal upside in this counter. One is that it will prevent ABFL from being compulsorily being listed and make the corporate structure more simple. I don't see too much of value coming out of the merger taking place. It's more of a effort to avoid getting the ABFL stock listed.
Okay. Ashish, let us get your view in the opening. Any particular stocks that have caught your attention?
Yeah, so as we discussed about IT, I think that's one space which is catching my eye. I think there's a good, possibility of a strong bounce back we can witness in IT as a basket. Apart from that, I think in the defense basket, a stock like Bharat Dynamics looks quite promising after a consolidation of profit booking. My sense is, this stock has formed a strong base around 1700, and as a disclosure, we continue to hold our, BDL in our portfolios, and my sense is there is a good possibility stock has a potential purely based on technical to retest or cross its previous all-time high, which was around 2000 kind of trajectory. From a business perspective, I think the stock is trading at 9 times price to book to bill ratio, so almost 24,000 crore kind of order book with a top line of close to 2400 crore gives a very very strong revenue visibility. So almost 20% kind of top line growth can be expected in the stock in next couple of years. And since there's a lot of indigenization which is helping the operating margins stay about 2021 kind of zone, so that is also reflecting into the strong financial performance. So all keeping all this in mind, I think Bharat Dynamics is one stock in the defense basket which looks promising to us.
Okay, what we'll do is we'll take a quick detour in the broader market before we take these conversations forward. It's an even Stevens as far as advanced decline ratios are concerned. 1,000 shares in the green and 1,000 in the red. How rare is that? Okay, the IT index is the top gainer, 1.25% higher, 37,451. And I'm again requesting the PCR, if you have the Nifty IT ETF that we've sent as a image, kindly please show that on air. That is something which is relevant to long-term investors, which you can ride the index with very little of effort and a lot of positive gains. We'll again wait for that to come in. Okay, we'll look at the Axis Nifty IT, but it's actually the Nippon IT ETF. Yes, this is the one. Yes, this is what is happening today. If we can do a long-term chart, that will be wonderful. That one. Meantime, what I'll do is I'll pick Vineet Bojlinkar on Geo Finance. In a market, Vineet, which is trending lower and have all sorts of problems, here is Geo Finance hitting a record high on consistent volumes. How do you see this against the backdrop of what's happening in mid cap and small caps? And is this a buy at current levels?
So, very difficult to take a call on a counter like Geo Finance. But I will tell you a couple of things is that, the way the Geo was rolled out in the Indian markets, right? And they spearheaded to millions of users in a very short span of time. I think that base is going to serve as a very strong pillar or base foundation on which Geo Finance will be launched. So there will be a plethora of advertising followed with, vacating of space by Paytm. And, Geo Finance is coming in with BlackRock as their mutual fund partner. Obviously, they are going to do some kind of granular models for investing in shares, which will help them to ramp up mutual fund distribution using their platform. That's also going to be a very important aspect for launching their their payment wallet, because they have the entire wherewithal. You have retail, you have entertainment, and you have basic internet. So all these services along with mobile are going to provide them with a formidable platform that the market will have to contend with. And so I think that these stocks will continue to move up until and unless the management does not put out its concrete plans on paper. And we know that Reliance always has grand plans. So I believe that keeping in the rationale of how Geo has been unfolded, how Reliance retail has shaped up to become a billion-dollar company in the unlisted market, I think Geo Finance is going to go in the same way. So we would be looking to buy these stocks on any declines that happen.
Okay. For the moment, you see a very sharp uptick on Geo, and that's also backed by huge volume. So far, about 661 crores of Geo Finance has been traded at a record high. Coming to you, Ashish, because you manage a PMS, as also you are a fabulous techno funda analyst. What do you think of Geo Finance at current levels? Do we wait for better prices, or is this a momentum purchase?
So as a disclosure, we hold Geo Financials in our portfolio, and I think that's a switch we took almost 1.5 months back, and I think stock is hitting fresh all-time high after a very strong consolidation with very strong volume activity. So yes, my sense is it could be a good momentum play at this point of time, and there is a decisive breakout which has happened at 350 levels. So my sense is till the time the stock trades above 350, there is a strong likelihood we might see move extending towards 400 odd levels. As far as fresh entry is concerned, or this is concerned, I think this is more of a momentum, and we need to understand it is performing in an environment where most of the market, and particularly most of these NBFCs, are under stress, and this could be a good I think momentum play, at least from a short to medium term perspective. So with 350 as an broad stop loss, I think stock is it looks good for another 8 to 10% kind of upside from current levels.
Okay, let's get Ayush as well in on Geofin and help us understand what do the technical charts really suggest. What could be the next immediate targets? It's already at record highs. Where do you see the next targets on Geofin now, Ayush?
Well, I'm on board with Viniti and RCG. Again, the stock has performed really well, and it has given the breakout on all time frames, be it daily, weekly, monthly. Even in yesterday's trading session, it has given an important breakout of 350 levels and currently trading at 370. Well, the stock is definitely positive. Those who are holding the position should continue to hold it by keeping a strict stop loss of 348. The targets I'm seeing here, the first target I'm looking here is 391. If that is crossed, then 400 is on the cards.
Okay. So that's as far as Geofinance is concerned. You know, it's turning out to be an IT kind of a day on the Nifty. Apart in the top 5-6 names, at least 5 names can be spotted from the IT pack today. TCS is the top mover. It's moving very sharply, 2% higher in trade. Along with it, there is also Tech Mahindra, HCL Tech, Wipro, Infosys, LTI Mindtree. So all 5-6 of them IT names clearly, and the Nifty IT index is now 1.5% up in trade. From the futures basket, it's Oracle Financial Services Software that's moved up very strongly, 5.5% higher in trade. Vinit, first to you. Give us your view on IT, and then I will come back to Ashish, who started off with the IT talk, and then I'll come to Ayush as well. Vinit, about IT stocks, how are you placed? What is your sense right now?
So we have been underweight IT for almost more than a year, and we think that over the recent term, the growth is coming back. We are seeing extended growth in the US. US is not faltering despite all the headlines about how potential, negativity that can creep in. So, given those factors, I think we would like to get selectively positive on the IT sector, and persistent systems, LT, Mindtree, and TCS are some of the large cap stocks that we will go.
Okay, what about Ashish? Oracle Financial Services, would you look at this one and tell us where is the stock headed?
Yeah, so my sense is after a strong underperformance for many years, I think Oracle Finance has started showing very strong resilience, particularly after its latest quarterly results, where it posted a very strong set of numbers, and this got completely into the the PE re-rating which started happening in OFS. So my sense is from a technical perspective, this is a fresh start, and again the stock has come out of a consolidation phase above 8,000 trajectory. So one can keep 8,000 as an kind of stop loss from a technical perspective, and I think there is a strong possibility stock is headed towards 9,500 kind of trajectory. So good, I would say 10 to 12% upside could not be ruled out from current levels in OFSs.
Okay. Ayush, what do you find strong on charts from the IT pack?
Well, IT stocks are performing very well, especially OFS has 5% up. Right now, I have two stocks in mind. The first stock is Wipro. If you look at the Wipro chart, we are seeing a pending pattern breakout on its intraday chart, which is a 60-minute chart. Plus, on the weekly chart, the stock is at support zone, and on the daily chart as well, the stock is at a support zone. So I think Wipro is actually a good bet to take on. It's trading around 517, 518 right now. I think it should be bought at 10 levels. The first target we are seeing here is 535. If that is crossed, then we can see a level up to 550. The second stock I'm liking right now is Tech Mahindra. If you look at Tech Mahindra's chart, daily chart, we are seeing a downward sloping trendline breakout, plus there's a positive RSI crossover, plus the volumes are decent in this stock, and there's a cluster resistance breakout. So definitely Tech Mahindra is looking good at 10 levels, so can be bought at 1304. And the targets we are seeing here is 1350. The stop loss we have to maintain here is 1290.
Okay, what we'll do is let's shift gears and look at what's brewing in the markets. I believe we will need to pay attention to TCS. I see it regularly coming in my minor block deals segment, and absolutely the right reason. It's a blowout. 4228. It's accompanied by a very sharp surge in volume as well as price, 2.5% higher. Open interest is also ticking 1.2% up. Ayush, to you, what are TCS charts telling you? Is this a momentum worth chasing after 3 days of gains?
Yes, TCS can be seen right now. It has given a good breakout just now at 4150. It is currently trading at 4225. I think we should wait for a minute because it's a very big uptick we have seen here. So I think 4150, 4160 is an ideal buying zone, and it should consolidate there a little because we have seen a good rally from 3960 and it has gone on the higher side now. So I think we should wait for some time to settle it down. Maybe get it turned towards the consolidation. Then we can take a call on that.
Okay. Right, so that's as far as TCS is also concerned. Let's look at some of the other stocks that are moving in the futures space. Indraprastha Gas, that's moving up smartly, 2.5% higher in trade. Ashish, to you, how are you looking at this entire gas space that's now started to gain some momentum? We had seen, stocks like GAIL, Mahanagar Gas, all of them, roaring to fresh highs as well. How would you look at this entire space? Does it have more legs to chase?
Sakshi, we at this point of time don't have any exposure to the gas space, but yes, we are chasing a lot of power stocks, and that's a thesis we have discussed a lot on your channel as well, where we said that the renewable energy space, which is growing from 178 gigawatt to almost 500 gigawatt in next 7 years, indicating almost 17% capacity addition, which clearly indicates almost 45 gigawatt is what we are going to add every year. So that's a massive target. We are going to see huge power shortages in days to come because of rising rapid industrialization, real estate, capex, manufacturing, and all this is going to get reflected into a lot of these companies, whether it's NTPC, Coal India, REC Limited, or smaller players. I think that's where the real strength lies. So our focus is on stocks like NTPC, Coal India, REC from a medium to long term perspective, where we see strong possibility. As far as coal is concerned, I think at current levels also it is giving a dividend yield of almost 4 to 5% with record production moving towards 800 million ton kind of production. And technically, stock has come out of 12 years of consolidation. So Coal India would be our preferred bet in this space.
Okay, Vineet.
The stocks we have discussed like NTPC, coal, these stocks we continue to hold in our portfolios as well.
Okay, fair enough. Vineet, would you like to add on the power space, and where do you see momentum continuing?
That's a global mega trend. It's going to last for another 10-15 years because, we are seeing newer sources of power and energy that need to be built up. Data centers are hogging a lot of power consumption, and we have to build alternate sources of power in terms of, nuclear as well as renewable. So I believe that this space is not going to end very soon, and all three forms, that is generation, distribution, and transmission, are going to benefit from this. Tata Power is a very strong play on the rooftop solar theme. They also have presence across all different segments. So this stock looks quite attractive. We like Adani Green. Uh, Adani Transmission is also another counter that we have just initiated today. We have a target of 50% plus on this stock. So these are some of the stories that we think will lead the market.
Okay. All right, but it's IT that's hogging all the limelight. Oracle Financial now 4.5% at 8,472 at fresh highs. TCS 2.2% higher at fresh highs as well, 4,213 right now. So that's where all the action is on TCS. Ashish, would you have a view and tell us where exactly the stock is headed?
Definitely, Sakshi. So I think the stock which is hitting fresh all-time high in an environment where its peers are still lagging behind that performance, and TCS has crossed almost 3 years of consolidation and is at a fresh all-time high. It looks like the stock is going to take a lead, and in this move itself, we expect the stock to move towards 44, 4,500 purely based on technical behavior. So my sense is ITBs, if one wants to take a bet on the entire basket, but if one has to look individually one stock, then I think it's going to be TCS, where I think a good consolidation breakout has happened, and at around 4,050, 4,100, there is going to be a lot of support coming into the stock. So this gives a very strong risk reward in favor of TCS.
Fair enough. Well, thanks a lot, Ashish, and thanks a lot, Vineet, for being with us on this very special edition and sharing all those stock ideas and strategies for all our viewers. Appreciate your time with us on our market today. What we'll do, viewers, is we'll take a very quick break. When we return, Ayush Mehta will be with us to help us navigate through more stock ideas going forward. Stay with us right now.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Welcome back. You're watching Market Today on Business Today Television. I'm Sakshi. With me is Shail Bhatnagar, and we're in conversation with Ayush Mehta, Technical Research Analyst at Nirmal Bang. The markets are okay at this point. About 0.4% of gains can be seen on the Nifty. So it's again back about 22,420 odd levels, is holding on to that level. It's the IT pack that's supporting the move on the upside, and what's also pulled up pace is now the Nifty Bank along with private banks, financial services that are helping in some gains as well. For the Nifty Bank specifically, Ayush, let's ask you, where exactly are you keeping your focus as far as the banking names are concerned? Would you stick with the private banks at this point in time?
Yes, the private banks are good. What caught my eye right now is HDFC Bank. It has given a fresh breakout of 1440. There was an inverse head and shoulder breakout, and the neckline was 1440, and it has picked up right now. It is currently trading at 42, some 1442. So I think ICICI Bank can be bought for a target of 1500. The stop loss you should maintain here is 1410.
Okay. All right, so 1410 currently as a stop loss, and the strong traction continuing on HDFC Bank right now. Along with it, I can also see ICICI Bank that's picked up a very strong move, suddenly 1.3% higher for this one as well. Apart from this, a whole host of other stocks that are moving in trade. Reliance Industries is supporting the market now, 0.7% of a move for that one too. Axis Bank has pulled up in trade, about 1.1% higher in trade for this one. So it's the IT pack, it's the banking space, it's also heavyweights like Reliance Industries, and some kind of action coming back as far as the life insurance majors are concerned. So SBI Life is up about 1% right now. So that's where exactly the action is panning out to be. Okay, on SBI Life, would you have a view, Ayush?
So SBI Life has given a breakout right now on its intraday charts. Of the breakout was at 1540 levels, and the charts are looking positive. It has taken a good support from its 20-day moving average, and that was at around 1520. So I think SBI Life can be bought at current levels. The first target we are seeing here is 1570. The stop loss we have to maintain here is 1530.
Okay, Sakshi, what we'll do is we'll do some option spotting, and I'm requesting the PCR to fire Nifty's 22,400 call expiring on 14th of March. At the moment, it's priced somewhere like 132, 133. Let me just see the correct price. Let's take Ayush's view on this one. It's running very rapidly, 138 for you. Ayush, yes, this is the one, correct. Ayush, what do you think? Is this momentum worth chasing? HDFC Bank is firing, Infosys is firing, Reliance is muted, ICICI Bank is firing. Your view?
Well, I'm not a derivative analyst, so I won't be able to comment on options, but Nifty is currently looking positive. 22,440 is a big resistance zone. If that is broken, if that is broken right now, then we can see a good rally towards 22,500 to 550 levels. So that is my view on Nifty currently. 22,440 is the level we have to watch.
Okay. Okay, ladies and gentlemen, please keep 22,400 Nifty call on your radar. Also take a financial opinion which is independent of the view that you are hearing on Business Today. The most recent high of this particular call has been 298 rupees, and it's moving fairly rapidly from what we see was a low so far, which was 83, 84 rupees. Keep this in mind, keep it on your radar. The index heavyweights are moving fairly rapidly, which is HDFC Bank, which is ICICI Bank, Reliance, and of course now Infosys. If these four index heavyweights are in the green and the index has corrected from a recent high, then a swing trade is in the works. We'll also keep on following this in the latter half of the day. But Nifty March 14th 22,400 call on the long side at about 133, 134 now. Sakshi.
Okay, a whole host of stocks now gaining some traction. The auto space stocks also, the large caps, Tata Motors, Maruti Suzuki, those are the ones that are coming back in flavor again. Apart from the stocks that have already been mentioned, from the life insurance space, HDFC Life, SBI Life, both doing well. From the Adani packets, Adani Ports, that's gaining traction again at about 0.6% of a move on the upside. And you do have even large caps like L&T and the heavyweights like Bajaj Finance and Bajaj Finserv now supporting the market move on the upside as well. So it's financial services that's now the top moving sectoral index, 0.7% up in trade. Nifty Bank, Nifty IT, the oil and gas, and the auto space. Those are the spaces that have sprung themselves into the green as far as stock moves are concerned. Bharti Airtel coming back in flavor, 0.6% up in trade right now. Any view on Bharti Airtel, Ayush? We've been seeing consistent move over the last few months on this one.
So Bharti Airtel is performing well. It has been given a good breakout since 1135 levels, and it is currently trading around 1200 right now. So we have to look at one level, 1215 to 1218 is the level where it is continuously taking resistance from last 2 to 3 days. Once it crosses 1218 rupees and it sustains above that for some time, then we should take a buy call on this stock for a target of 1250. The stop loss we have to maintain here is 1199, but the buying level should be about 1218 only.
Okay, so that's as far as Bharti Airtel is concerned. Let's look at some of the other movers as of now. As far as the broader markets are concerned, still under pressure for the mid and the small caps. Those are the spaces that still look weak at this point. Nothing really substantial to be marked out as far as the broader markets are concerned. Clearly, it's the day of the large caps and belongs to the large caps. And apart from IT, let's take a view on L&T now, about 0.7% of a move. Ayush, your sense on L&T and how should one go about it?
So looking at L&T charts only right now, and then you raise the question on that. Yes, L&T is looking positive right now. It has made a open is equal to almost same, that is 0.5. L&T can be bought at current levels. The first target we are seeing here is 37.25. Once 37.25 is broken, then 3800 levels can be seen as well. Stop loss should be today's day's low, which is at around 36.39.
Right, so that's as far as L&T is concerned at the day's high, now moving even further higher, 0.8% of an uptake, a good pick right there. We'll continue to keep an eye out on this one as well, Ayush. Intermesh, do you look at this stock? This stock was on the brokerage house's radar today, and we did see higher targets being mentioned, and it's now moving at day's high 2.5% up in trade. Do you track this one?
Yes, we do track this one. We had initiated a short call on this yesterday and the targets were achieved. But today it is currently rating the rest of 26.33. So once it crosses 26.33 or let's say 26.35 and it should sustain above that, then only we will see a reversal in this stock. Once it crosses 26.35, then only we would initiate a buy call on that, because till the time it doesn't cross that, the original momentum remains weak in this stock.
Okay, ladies and gentlemen, 9:45. The first half hour of trade is over. The Nifty is up 100 points. The Nifty Bank is up 428 points, 47,500, and you have a nice 0.5% uptick on the Nifty IT index. For the moment, it seems to be good going as far as the main index is concerned. What we'll do is we will revisit the call as far as the one that we had marked, which is the 22,400 call on the Nifty. For the moment 137, but keep an eye out on this one. Sakshi, I think one stock that you track is Poonawalla FinCorp. This is also in a good mood, and the chart also looks fairly exciting for a nice swing trade in the making. Yesterday the company had a good day outing on the market, and Poonawalla now corrected from 520 to somewhere like 431, and now you have a nice uptick, 456. Ayush, what are the charts of Poonawalla telling you?
There's a trendline breakout we are seeing in Poonawalla chart, and on intraday chart we can see a flat pattern being established right now. So 458 is a breakout zone of that, and we can definitely preempt this stock. And once it crosses 458, we'll see a new rally which can again take this stock towards 485. And once that is broken, then we will see a new rally towards 520. Well, the long-term charts are positive. There's because of the mid caps not doing really well, so I think that is the reason the stock did not perform in the last few days. But definitely the stock has given a breakout in today's session, and after 460 it's going to be around 485 again.
Okay, let me just briefly.
So that's there, and of course, Sakshi.
Yes, please continue, Shail.
Please continue.
So basically, I just wanted to briefly mention on the new listing expected today, that is RK Swami's IPO. It's settling at a discount of 13% to the issue price, 252 against an issue price of 288. So that's something that you need to keep an eye out on. Pre-opening listing indicates some kind of a discount and mild downtick that you can actually expect on this new listing today. Just wanted to point that out, Shail.
Okay, Sakshi, what we'll do is we'll look at REC Limited for two reasons. One, the stock is doing extremely well, and till about 10, 20 minutes ago, that was the lone stock that Ashish Chatramota suggested. 485, the all-time high is 520. Ayush, what are the chart checks on REC telling you?
Well, REC has performed really well in last 1 year, in fact. And on the daily and weekly chart, it is showing a good breakout. It has formed a good higher to higher bottom formation. And IVC can be bought at current levels. It's currently trading at around 485. The first target we are seeing here is 500. Once that is done, then we can see 525 as well. Stop loss we have to maintain here is 476.
Okay, we'll also look at HDFC Bank, Sakshi. It's clicking away merrily at 1451. For the moment, it's one of those top performers on the Nifty, 1.7% higher, an uptick of 24 rupees. But one really doesn't know, when HDFC Bank reverses and starts feeling the pain because of selling pressure that comes from our foreign friends. Be that as it may, at the moment, Sakshi, it is my duty to tell you that it's being stopped by the 34-day exponential moving average on its way up. So that's a bit of a problem. But let's see whether it's able to overcome this hurdle or not. One of those 3 or 4 rare stocks, sadly with a huge weight on the index, which are trading much below the 200-day DMA. Let's see what happens. But so far, HDFC Bank has been up a whopping 1.8%. I can't remember in the last 2 months where we've seen these kind of strong gains. I think it's recovered. It's gone over 34 EMA. Ayush, view on HDFC Bank?
Well, HDFC Bank is definitely positive. We had recommended like 10-15 minutes back at 1440 levels. It is currently trading at around 1454. I think 1500 is definitely on the cards. It has given a breakout of its downward sloping trend line as well as inverse head and shoulder. So definitely HDFC Bank is extremely positive right now. As long as Bank Nifty is holding itself, HDFC Bank should perform.
Okay, and for those people who've been with us for a couple of days prior to today, we had also marked the beginning of a nice swing trade in AU Bank. The bank has corrected very sharply and since yesterday has been buzzing on the long side. 590 for you, now probably at a 2-week high. Ayush, very quickly, AU Bank, 591.
Well, AU Bank has given a breakout of its 20-day moving average. It was at 583. And it hasn't given the breakout of 20-day moving average since January 2024, and it has given it right now. And I feel it should move up now. It should be a reversal trade, and the RSI is positive. So I think 600 is the first level we are looking at. Once that is crossed, then 625 can be seen here.
Okay. Right, so that's as far as the banking space is concerned. Another stock that Shail, you had pointed out yesterday was Trent, and that's again moving up in trade. Ayush, if you track Trent, would you tell us where exactly is the stock headed? Right now it's 1.5% higher, 4065 is the current level, 4068 now, days high.
Well, I've been tracking Trent since 1800 levels, and I've been giving buy calls on that in the last show. Also, I mentioned this, and Trent is one of my favorite stocks. And Trent definitely bought at current levels. The first target we are seeing here is 4250. We have initiated a buy call to our clients as well. Once that is crossed, then 4500 is definitely on the card. It should be a portfolio stock rather than a trading stock, and keep it for long term.
Okay, so that's Trent for you. On other, how do you see the move if you track this stock at all? 0.4% high in trade, and we did have Vineet, who's bullish on Adani Enterprises. Anything from the Adani basket that you may be positive on, and Adani Ports especially?
Let's talk about Adani Port first. The chart, that's a very good. It be daily, weekly, or monthly. But the problem is, the stock is in consolidation phase. I think since February starting, it is in the same range, like 50 rupees to 100 rupees is the range the stock is facing. The big breakout will only come when the stock crosses 1355 levels. Once that is crossed, then we can see a big rally towards 1450 to 1470 levels also. But till the time it's not crossing the consolidation phase, I don't want any traders or investors to just get stuck in the consolidation. We should wait for the consolidation to give a breakout here.
Okay, so that's as far as Adani Ports is concerned. Oil and gas space is again showing some kind of a strength, especially on stocks like Oil India, for example, that's ticking higher. Do you like this space at all for the momentum that it has been seeing for the last few months, Ayush, especially in the upstream majors and the OMCs?
Well, OMCs performed very well, beat HPCL, BPCL, ONGC. But the thing is, the stocks are in consolidation right now, and if you look at charts of all the stocks, they have a very similar kind of pattern. It is more of a sideways to more of a sideways. Once the sector starts moving, then only we will initiate any buy calls in this sector.
Okay.
Sakshi, some of the PSU stocks are coming back to life, and we'll start with the BDL. This is something again what Ashish Chatramota had suggested, and this is also to some extent news led because yesterday you had seen the test of the Agni 5 missile, which is made by Bharat Dynamics Limited. Unfortunately, the stock is at 1736, 1747 at day's low. But even at these prices, we have some decent blocks happening on this one. I'll also mark IRCON at 209. The counter is again at day's low and is now at its lowest level since 14th of Feb. As also SGVN. These prices are correcting, profit booking happening here. 114.6 SGVN is trading at its lowest since 14th of Feb. The Nifty meanwhile 68 points higher, 22,400. The most recent uptick was still 22,450. So a bit of a intraday swing coming in towards the downside. Remember, the day's low has been 22,320. The index has moved all the way up to 22,440. So an intraday swing of 120 points has already happened on the index. For the moment, the index heavyweights, Reliance, HDFC Bank and Infosys are in the green. So is ICICI Bank. HDFC Bank in fact at day's high. Sakshi.
Right. Anything else, Ayush, that you've spotted that we may have forgotten to ask you that's maybe in momentum and one should keep an eye out on any of the stock?
One more stock I'm liking right now is ICICI General Insurance. Simple Insurance is also doing well. We can see HDFC Life as well. Life is doing well as so. So ICICI GI, the stock has opened at 1654 and the low is the same. And the stock has been continuously holding its 20-day moving average, which is around 1660. So it becomes a very important support zone for the ICICI GI. So I think ICICI GI can be bought at current levels for a target of 1720. Stop loss we have to maintain here is 1640. I think ICICI GI should outperform because the RSI is positive. On the weekly chart, we are seeing a good flat pattern formation happening.
Okay, we'll keep an eye out on the insurance space as well, which has been constantly buzzing, and this stock as well, that's up by about 1%, 1671 currently. Let's look at some more stock ideas then. Auto space, I have not asked you. Ayush, would you be looking at stocks like, say, Tata Motors, Eicher Motors is picking up pace right now again. Of course, these stocks have had their good run up, all-time high levels. Tata Motors, of course, the best stock on the Nifty in 2023. It continues with an up move. Albeit some pressure that came in on the Tata Group just because of the news flow last few days. It's back up about 0.5% high in trade. Eicher is coming back in flavor. Maruti Suzuki is again trading at around all-time highs of 11,433 odd levels. How would you look at these particular auto names and any trade here?
Specifically, we'll start with Tata Motors. So if you look at Tata Motors chart, we are seeing a cup and handle formation happening in 16-minute chart, but the breakout is at 1037, which is pretty high. So once it crosses 1037 here, then only we can initiate a buy call for a target of 1070. Stop loss we have to maintain here is 1020. There's a disclosure here. Tata Motors is there in my family portfolio as well from quite some time, from quite some years long time. And if we talk about Maruti here, so Maruti is definitely at the high, but the thing is, Maruti is not performing as per the required data. I mean, it has formed a double top formation on its daily chart and currently at a support point of 20-day moving average, which is 11,450. If that is broken, then we can see a downside towards 11,150 also. We have initiated a short call in Maruti in yesterday's trading session at these levels only, but we have preempted this call. Once the 20-day moving average is broken, we can see a downside in Maruti.
Okay, we are at 9:57, ladies and gentlemen. Let's start wrapping up the market. In these days of extreme volatility, remember, in March, you have two main events, which is the advanced tax numbers that go on March 15th. And because of that, and also year-end circumstances, a lot of profit and losses are booked. And therefore, you see this extreme volatility. So far, in the first half an hour of trade, we've seen the Nifty climb fairly decently, 91 points higher, 24,426. It's led by, for a change, HDFC Bank, which has overcome its 34 EMA. That's good news. Reliance, Infosys, ICICI Bank, and a clutch of other index heavyweights are in the green. This is good news. The banking index is 419 points higher, 47,750. Again, good news. The IT index is the main draw today, up about 0.7%, 37,233. This is led by two giants, TCS, as also to some extent Oracle Finance. Both of them at a record high, and these are the only two stocks in the Nifty 500 which are at a record high today. Let's look at 52-week highs, again just two. So you can well imagine what the theme is. Our analysts today have recommended that you take a long-term positive approach on the pharma index via the Nippon India pharma ETF, somewhere in the vicinity of 19 rupees, 20 rupees, and the Nippon India IT ETF, somewhere in the vicinity of 38.50, 39.50. So these are the two things that you can do and sleep peacefully and try and take benefit of this move that is coming into IT as well as pharma. Remember, these are long-term bets. These are not intraday trades, and these are also not short-term trades. Sakshi.
Absolutely. So that's as far as how the markets are concerned right now, and there on your screens you do see the listing of Bharat Highways InvITs happening at a positive zone. Right now it's trading at about 100 odd levels, about and RK Swami is listing at about a 10% discount right now at 257 odd levels. So that's the discount listing for RK Swami, about 13% of a discount for RK Swami. Right now it's picking up pace again.
After this we'll be
odd levels can be seen on that one. So a weaker listing for RK Swami can be seen. This is against the issue price of 288 odd levels currently. So those are the two listings that we were keeping an eye out on, and that's how the listing has taken place. For Bharat Highways InvITs, it's a positive listing, and for RK Swami, it's a discounted listing of 13 odd %. So keep an eye out on all of those new debuts as well throughout the trading session. Many thanks, Ayush, for being with us on this very special edition and sharing with us all your thoughts and ideas, and we'll continue to track the stocks that you mentioned through the course of this day. And with that, it's a wrap from me and Shail on this special edition. Do stay tuned throughout the trading session as we continue to bring you all the news and updates that are impacting the markets right now, that are buzzing in trade, and which you need to keep an eye out on too. Many thanks for tuning in for now.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
We moved to T+1 settlement, right? And we got a lot of, I would say, kudos for it, to say this is the first major market on the globe to actually move to T+1, and many of the jurisdictions are actually facing significant challenges in doing this. Now, meanwhile, we announced T+0 and a calendar for T+0 and instantaneous settlement. So we said T+0 optional will come in March of this year. So T+0 will come by the end of this month, and we've already announced the calendar of option. So this is optional T+0 end of this month and optional instantaneous in March of next year, right? Now,